Hey traders, how's everybody doing? Hope you had a nice day. It is Thursday, January 22nd, and welcome back to the Market Movers report of everything that happened today in the stock market. Before I get going today, I want to mention next Tuesday to Thursday, I'm doing my next 3-day options boot camp, options day trading boot camp. So basically what it is, if you don't know, I am going to teach you exactly how I day trade every single day. And it's basically just, we trade live. We start before the market opens up and we go about 90 minutes to 2 hours into the day, each day from Tuesday to Thursday. And I just teach you my process. So it's really simple. It's almost like as if you're looking over my shoulder as I'm doing my trading, and I tell you exactly what I'm trading, when I get in, when I get out, why I'm doing what I'm doing. So if you are somebody who is a newer trader, or maybe you haven't even done any options trading and you've been kind of scared to get into it and you want to know the best way to kind of like dip your toes in, this would be something really good for you, because I'm deliberately putting myself in your shoes, as it were, as the person with a smaller account. So that means that I'm not going to be going in trading like 50 contracts and, freewheeling like Wolf of Wall Street style while you're just sitting there going, what the hell is this guy doing? I'm going to be going very, very slow and steady, like getting in one contract, getting out one contract, maybe getting in one or two contracts here and there, keeping it very controlled, trading exactly the same way that a person with like $1,000 or $2,000 in their account would be wanting to trade. I realize that I haven't even brought this up in the last couple of weeks, so I guess I'm obviously a better options day trader than I am salesperson. But just putting it out there, if you feel like joining me, there's only 10 seats available. I believe that there are still some seats available right now. So unless it's filled up, go ahead and sign up and join me next Tuesday to Thursday, and we'll do some options day trading together. All right, so with that out of the way, let's get into the day's news. Markets closed the session today with solid gains for the second straight day as the relief rally continues, with the S&P 500 climbing 0.55% to 6,913. The Dow added 0.63% or 370 points to close at 49,384. And the Nasdaq surged 0.91% to close at 23,436 on the back of strong tech gains and robust economic data that crushed expectations. Now, if you look at the charts today on a quicker time frame, like a 3-minute candle time frame or even a 1-minute candle time frame, you can see what looks like a potential double bottom setting up. So on SPY and the triple Q, we kind of fell out, came up, came back down. So the two lowest points of the day today were shortly after the open and then pretty much right at the close. So potential double bottom. Now that's definitely not me saying that I think tomorrow is going to be a real strong green day, just because there might be a double bottom, but there's something to look out for. Me personally, I had a small gain on IWM today. Just traded a handful of contracts, nothing crazy. But I got in pretty early in the day and then rode IWM on some call options until about the middle of the day when I closed out my last call. So that was good for me, so happy about that. This morning kicked off with powerful economic numbers showing Q3 GDP was revised up to 4.4% from 4.3%, while initial jobless claims came in at 200,000, which is well below the 209,000 expected, signaling the labor market remains surprisingly resilient. Core PCE inflation held steady at 2.8% year over year, exactly in line with forecasts, keeping the Fed on track to pause rate cuts at next week's meeting despite the solid growth picture. Big tech carried the Nasdaq higher, with Meta absolutely exploding 3% to lead the pack. While Microsoft gained 1.1%, Alphabet climbed 1.6%, and Nvidia added 0.5%. The megacap strength underscores how yesterday's Greenland tariff reversal is still fueling risk appetite as traders pile back into growth names that got hammered in Tuesday's brutal sell-off. Earnings season delivered mixed results. GE Aerospace crushed expectations with Q4 adjusted EPS of $1.57 versus $1.44 estimates, and revealed a staggering $190 billion order backlog. But the stock still fell 5.7% as traders took profits after its 70% run last year. Procter & Gamble beat on earnings with $1.88 per share, but missed on revenue, and the stock rallied 2.3% anyway. Abbott Labs got slammed 8% after disappointing guidance. So the thing with Procter & Gamble, they beat earnings, but they missed revenue, and the stock still rallied 2.3% today. And then there's other names where they beat earnings and then they slide the very next day. It just goes to show you, I've said this before in the last couple weeks, you can't count on reports as any like bulletproof indicator of what's going to happen the next day. That's why I always say whatever happens in the news, I never tell you to just don't pay any attention to the news, but I will always say the best thing to do is simply focus on the chart right in front of you at any given minute, because the candlesticks on the charts are what is real. It's what's really happening right now. And that's also why I will frequently say, don't ever think that anything is just going to run all day long. So today, on the SPY and the Triple Q and the IWM, you could have made money going long or short, but you wouldn't have made money either way if you thought that it was just going to do one thing all day long, because you will have needed to take advantage of the particular time frames in which your trade was going to work. So that's why as a day trader, it's always good to think more short term. Like, I'm not saying always be extremely scalpy. I'm not saying you should always try to be out within 5 minutes of opening your position. But I am saying right now in this climate, it's definitely better to think in terms of shorter time frames. And so when you get in, whatever time it is, when you get in, if you see a couple nice, big, juicy candles that are making you some money, take advantage of that and close at least a portion of your position every time you see those big pops that are going in your direction. So tomorrow we'll bring a lighter calendar with Michigan consumer sentiment at 10 a.m., but all eyes will remain on Intel's after-hours report tonight and whether next week's Fed meeting on January 26th brings any surprises. With 2 days of solid gains erasing most of Tuesday's tariff-driven sell-off, momentum is shifting bullish again, but volatility remains elevated as Trump's next policy move keeps everyone on edge. So that's it for today. Hope you had a good day, and I'll see you tomorrow afternoon. Bye-bye.